Hi, I'm Dennis Rath with Dennis Rath Home Sellers. Today we're going to talk about something near and dear to my heart. It's called affordability. We're having an affordability issue with homes today, and Washington, D.C., just like always, is trying to screw things up. They just offered up a 50-year mortgage. A 50-year mortgage. Now let's tie that together with the fact that first-time home buyers in 2025 are 40 years old. I mean, seriously. So let's get down to the basic facts of it. If you have a $400,000 mortgage, forget about the interest and taxes and all that other stuff for just a second. A 30-year mortgage, that's 360 mortgage payments. That comes out to about $1,111 a month. Now let's stretch that to a 50-year mortgage. That's 600 monthly mortgage payments. 600. Now you're talking about $667 a month. So it's the same debt, it's just more payments, and the more payments make it a smaller monthly hit. In the real world, though, we have interest, property taxes, and insurance, and private mortgage insurance in some cases. But the pattern is the same. It stretches the payment longer. On the campaign stage, lower monthly payment sounds fantastic and sounds compassionate. But here's the real big problem. Humans don't act like spreadsheets. The Dave Ramsey organization has hammered this for years, and they're right. Humans are emotional creatures, not Excel files. So they point out that a very small single digit slice of the people, maybe 7 to 9% of the people, actually make disciplined extra mortgage payments month after month. The other 90 plus percent, well, left to our own devices, we do what humans do. We pay the minimum and move on with life. So when a lender or politician says, don't worry, take the 50-year mortgage now, you can always pay extra on the payment or you can refinance. What they're doing is they're betting against human nature. And that's how you end up in debt on a house long after the roof, the furnace, and your knees are worn out. So let me be fair. On paper, there are some pros. Lower monthly payments, easier to qualify under the bank's ratios. And for some people, you can buy more house than you could with a 30-year mortgage. That's the theory. Now the reality. Catch number one. You're 40 years old when you start this. And when you're 90, it's paid off. The average first-time home buyer, like I said, is 40 years old in 2025 on a 50-year mortgage. So that means when payment 600 arrives, you're on your 90th birthday. The longer the term, the higher the risk, the higher the rates. Banks are not charities. The longer they're on the hook, the more they worry. The more risk, the more uncertainty, the more chances are something could go sideways. So they're going to actually charge a premium for the 50-year mortgage. It's going to be a higher risk product for them. So that means higher interest rates. Catch number three. More borrowing power pushes prices up. We just lived through that in 2020 and 2021. Interest rates crashed. Monthly payments looked cheap. Buyers could afford more house. What happened? Prices went through the roof. Giving everyone a 50-year mortgage so their payment looks smaller, and the sellers won't just sit there on the sidelines. They're going to raise their prices to meet whatever the new ceiling is. 4, equity crawls instead of grows. On a 50-year schedule, most of your early payments are going to be interest, just like on a 30-year mortgage. But you could live in that house for 5, 10, or even 15 years and barely scratch a dent into the principal. If prices stall or drop, you're stuck with a big loan and very little equity. So yes, a 50-year mortgage payment can lower your payment, but it doesn't fix the real problem. And financing tricks can shuffle the paint around, but it's not going to make the pain disappear. We have seen this game played out before. This is not our first rodeo. Clever and Housing Solutions. In 1995, the HUD, United States Department of Housing and Urban Development, or HUD, under President Clinton, rolled out the National Homeowner Strategy, as I mentioned earlier. The mission was simple: juice the homeowner rates. The playbook was to expand credit, encourage innovative underwriting, build big public and private partnerships with lenders and private organizations, nonprofits. At the same time, regulators were tightening and modernizing the Community Reinvestment Act, the CRA, a law from the 1970s, I believe Jimmy Carter put into place, meant to fight redlining. None of these were evil. They all started off with great intentions: fight discrimination, get capital into ignored neighborhoods, and help working families buy houses. But there's a pattern. Every time Washington says, we need more home ownership now, the answer always seems to be loosen the credit standards, get creative, and hope the risk works out later. By the time we got to the subprime boom in the 2000s, the environment was ripe. Innovative underwriting became a no-doc liar loan or exploding adjustable rate mortgages. A 50-year mortgage is just today's generation of that shortcut. Different costume, same script. How other places actually handled a housing crisis. Let's go back to the World War II Europe playbook. After World War II, Western Europe had bombed out cities, a baby boom, people flooding into the cities from the countryside. They had a housing crisis all perfectly. Overcrowding, they had slums, people living wherever they could. Their big solution wasn't a 60-year mortgage. The UK alone, their idea was not to put a 60-year mortgage in place. Their idea was to build more houses. In the UK alone, post-war government oversaw the construction of over 1 million homes between 1945 and 1951. Through the 1950s and 1960s, countries like Britain, the Netherlands, Sweden were building hundreds of thousands of homes every year. Did they get it right? No. Some of those concrete towers in Europe were just horrible. And they were not well built at all. But the core idea was sound. When you don't have enough homes, you build homes. You don't use the calculator to make it work. We keep trying to do the opposite. So why is this such a sticky wicket? Because our housing supply is undervalued. And here's a great example. Let's look at California and the city of North Olmsted in Ohio here. If you want to see how hard it is to add housing, look at California. Recent wildfires, tens of thousands of homes were destroyed. Years later, only a fraction have been rebuilt. In some of the fire zones, less than 10 to 15% of the destroyed homes have even made it to the permit stage. Permits, red tape, labor shortages, insurance, it's a mess. And that's how hard it is to replace housing, even when everyone agrees it needs to be rebuilt. Now let's come back home. The city of North Olmsted. Right now in North Olmsted, along Butternut Ridge Road, there's a proposal out for about 45 new homes, townhomes. That's on roughly about 5.5 acres near the historic district of the Butternut Ridge. The reaction, yard signs are everywhere. No new 45 homes. Folks are saying it'll destroy the character of the street. Now I get it. People love their street. Nobody dreams about more traffic, fewer trees. I'm not making fun of that. What we got to be honest is about is 45 new homes is 45 families housed. They pay taxes, they shop locally. Some of them will even work in the schools or the businesses around there. Every time we try to add a modest number of homes in a logical spot, the reflex is absolutely not anywhere but here. Then we get to act accordingly. We act surprised when our kids have to reach the age of 40 before they can buy a house. You can't yell no more new homes and complain about the housing prices in the same breath. It's just, it doesn't work. But here's another question that I'm hearing. Dennis, won't we have too many homes after the baby boomers, like myself, die? Let's tackle that story here. Prices, I've heard prices will crash after the baby boom generation. It sounds logical, but you have to look at what's actually really happening. Let's look into the numbers. Yes, the birth rate is low. People aren't having kids like they used to. But immigration and longer lifespans still keep the population growth positive for now. Long range federal projections allow for growing and then flattening, not falling off a cliff. At the same time, house sizes are shrinking. More people live alone, divorces, more blended families, more separate households. Remote and hybrid work has not vanished. People still want extra room for a home office or a Zoom room. Even with slower population growth, there's still a demand for good, well-located housing in healthy metros. Will some towns end up with too many homes someday? Absolutely. Places with no jobs, regions people leave because of taxes, crime, or climate. But solid homes in solid areas with solid jobs, water, and a good quality of life, those just don't turn into pumpkins just because the national birth rate has dropped. What should you do as a boomer or an heir of a boomer? So, what do you do with all this? Especially if you're a boomer thinking about downsizing or turning your home equity into retirement security. Or if you're an adult child who someday will inherit mom and dad's house, or a family trying to make trying to make smart decisions about what to do with a parent's property right now. Here's my straight answer. No, no nonsense. Make a decision based on your family's life, not the headlines. You only get so many years with a home that really serves you. Kids and grandkids, they grow up and they move away. Can you handle the stairs? Can you maintain the yard? Don't put your life on hold waiting for a congressional fix to the housing situation. Be suspicious of anything sold as a fast and easy 50-year mortgage for giving something at the end on the other end of it. Exotic loans just for you. If it sounds too easy, just ask, where does this go wrong in 10 years? Protect your equity like it's part of the family, because it is. Don't throw a 50-year mortgage on a paid off house or a nearly paid off house just because the payment looks small. Ask who's really going to be dealing with this debt later. You, your spouse, your kids? Have one clear plan for your property. Every home, yours, mom's, the old house, the old family house, ask, are we going to live here in the long term? Are we better off selling and simplifying? Does this honestly make sense as a rental, or is that just wishful thinking? Work with somebody who's seen more than one cycle. That'd be me. I've lived through the Clinton home ownership. That's when I was first licensed in the 1990s, the subprime boom and bust. And that's where that really crushed me. The 3% COVID rate mania, and now back to reality at 6 and 7% interest rates. My job is not to push you into the latest gimmick. My job is to sit at your kitchen table and say, does this make sense for you and your family at this point? Or is this going to come back and bite you in the butt later? Let's just not do that. Protect your family's housing wealth. If you're thinking about downsizing, sitting on an inherited home, or just trying to make sure that your real estate decisions support, not sabotage your family's wealth transfer, call or text me. I'll bring straight answers, real numbers, and maybe one or two bad jokes about a 90-year-old who's still making mortgage payments. If this was helpful, hit like and subscribe and share it with somebody in your family who's going to be part of the great wealth transfer. We're coming upon this great wealth transfer when the baby boomers pass away and their wealth is transferred on to their kids. So I want to thank you for watching. I know this was really long and it was a bit choppy at times, but please comment and like I said, if you need anything, just call, reach out. I'm always here. Dennis Rath Home Sellers, hoping you and your family stay away from a 50-year mortgage. That's it.